making us the leading equity crowdfunding platform in Malaysia. pitchIN has also recently released our annual ECF report and is now available on our website. So please do check it out if you're interested to find out more about us. pitchIN regularly runs sharing sessions like this to allow businesses to present their investment pitch and also to give potential investors like yourselves the opportunity to ask questions and to help with your investment decisions. So for those of you who are watching, please feel free to ask as many questions as you can. If you are joining us on Zoom, you may type out the questions in the Q&A column, and to those of you who are tuning in via Facebook, you may leave your questions in the comment section. Your questions will be addressed after the investment pitch. So joining us this evening, we have Frank from Properly, Jonathan from Supply Cart, and Rafiq from Intercon. Each of them will have 10 minutes to present their investment pitch, followed by a Q&A session. So without further ado, let me introduce you to our first pitch, Properly. Properly offers end-to-end property, resident and community management applications for the property industry. It provides serverless cloud-based mobile software solutions with command center capabilities from where a property developer, building management company, resident association, or joint management body steers its operations, staff, suppliers, residents, and other stakeholders. So without further ado, Frank, if you're ready, I will now pass the session over to you.
Thank you very much, Charmaine. Thank you so much for providing us the opportunity again to pitch to our potential investors. Today, I would like to do it a little bit different than what we have done in the past, because our campaign is live for about 2 months, and we've been pitching on pitchIN for, I think this is my fourth time, and we've decided to do it a little bit different. So let me share my screen with you. Let me go full screen. Charmaine, can you tell me if you can see my presentation at the moment?
Yep, I can see your slides.
Okay, great. So instead of giving you a standard pitch-in or pitch deck for a investment, I'm going to give you a little bit of the background of the company and a little bit more information about what we actually do. All our information you can actually find on www.properly.asia. You will find all our financial information there. There's an option for investors, and that will straight away take you to the page within pitchIN, where you can find all our financial details as well. So tell me a little bit more about Properly. First of all, we stand for resident satisfaction, and we want to empower communities within Asia. But we also have the ambition to go outside of Asia. We got some traction from various countries, including UK, Germany, and at the moment also Mexico. Let me tell you a little bit about myself. I came 16 years ago. I came to Malaysia. I'm Dutch. First, I worked within the advertising agency sphere. We had several companies in that realm. My whole life I worked in IT. And we got in contact with a Dutch company that brought a very, very interesting product to the market. The company was called MainPlus. We founded MainPlus Asia, Sunderberg, and that became a joint venture with a Dutch company. The Dutch company had at that time 250,000 property units in the Netherlands as a host. There came a moment where we had to say goodbye to the joint venture because our parent company was bought over by a VC from Sweden, and they only wanted to work on the European continent. So that gave us the opportunity at that moment that we started to work as ourselves. So that's where we also changed name from MainPlus Malaysia, Sunderberg, into Properly Asia, Sunderberg. And we had our plans and we had our ideas, but we looked at the market, what is there? We looked at some systems from Russia, we looked at systems from Germany and the UK, and also from the US, but we couldn't really find a system that would really fit the Asian market. Of course, we also looked in Asia, but we couldn't really find. So we made a decision in January 2020 to build our own system. Luckily, our Dutch partners at that time still gave us 6 months to support it so we could handle our current clients. So therefore, in principle, we built a comprehensive platform that really fits the Asian market, because the Asian market is quite different from the European and North American market, for instance. And I think we built a lot of features that amaze our users, and we still have a very large development pipeline as well. Now, what do we really do? In principle, every property developer goes through 4 main phases. its planning phase, its construction phase, the sales and marketing phase. And then once the sale is done, once all that effort went into that sale, now the customer need to be handled as from a customer care point of view and from an after sales point of view. And that's exactly where property fits the market. So we handle customer care and after sales services for property developers. We handle property, residence, and community management. Whether you're a property developer that has 30 units or 3,000 units, it doesn't matter to us. Each client, we would handle them individually. We applied a lot of new technologies like artificial intelligence, deep learning systems, machine learning, all driving the background of our data. And we're also very strong on environmental and sustainability. These are very important drivers for us as a team because we believe in a greener world. We believe in doing good for this earth and leaving the earth behind healthier than the way we found it. Now, as you probably know, and maybe some of you can recognize the 9 icons in the bottom, these are the UN SDGs. These are 9 of the total of 17 UN SDGs. UN is the United Nations, and SDG stands for Sustainable Development Goals. So we want to help the property industry and the construction industry to make healthier and greener decisions. We installed an advisory board for that as well, that is helping us in the background to deliver better technology for the industry. So some of the key benefits in working with Properly, where we are definitely, I think, very different from some of our competitors in the market, is in principle, all our clients don't have to invest in the software. We do all the investment in the software. This is also why we at this moment seeking for additional funding to develop new functionality into our software systems. 40% of the funding that we find is going to go towards the development, 20% will go towards our back office, and 40% will, the other 40% will go towards marketing our products worldwide. We think we have a very unique business model. I think at the moment, we're bringing a new product to the market. On the 15th of August, we have our big launch. And that's a product that nobody in Asia at this moment is doing. So I think from that perspective, we're quite unique. Further, we're data-driven. We provide instant reports, not just report one standard report. We can drive reports for a property developer, for instance, from his management point of view, from a supervisor point of view, or just specific for his front desk. We call that dynamic reports and statistics. We mainly, one of the things where property developers really struggle is in good quality communication, a track record, building a track record on specific cases so you know what happened, when, with who, where it happened. So we made a very, very strong case within our software that communication is handled between property developer and its resident, property developer and its customers, property developer and, for instance, his contractors and subcontractors. But we also make sure that dynamic automatic workflows are handled, rapid ticket closure, lots and lots of key benefits for our clients. Plus, we made sure that our whole system is built in multiple languages. That means any language in the world. We didn't go for a Google translation. All languages in the world can be handled within our system within 72 hours. So our services are all about communication, defect management, community engagements, payments. We handle payments through our system as well with one of the largest payment gateways in Malaysia. We added a new security visitor and guardhouse application into the application. So in principle, there's a lot that we handle within the application. Let me tell you a little bit about the logic of Properly. The logic works like this. All residents, so all clients from property developers, maintenance companies, resident associations and joint management body will give them a mobile application. It's free for them to use. And that mobile application connects to what we call the Properly Command Center. The Command Center is the full system from where the property developer or the joint management body will handle his own operation. All the data that comes out of the mobile application at a Properly Command Center will go to the data warehouse. And on the data warehouse, we can then look at that data and look for improvements because Properly is all about continuous improvements. So we let our AI systems look at the data and find specific issues with, for instance, staff or defects, or maybe even things that really go wrong within SOPs and KPIs, for instance. we can detect these and help the property developer or our clients to improve. We also connect through IoT systems in buildings like your pumps, your elevators, your security system, and all this. We can all feed that data into our data warehouse that then will become visible within the command center. Further, do we allow for industry benchmarking at a later stage within the database, within our data services? So this is what the command center looks like. Actually, the menu structure is much more extensive at this moment. I can see this is probably a picture from about 3 or 4 months ago. But we kept it relatively simple on the outside, but really functional on the inside. A lot of technology in behind. Then the resident application, simple to use, big buttons, easy to use for everybody that will be working with it. We handle defects, payments, services, facility bookings, notifications, and like I said, multiple languages. And at this moment, a new module that we added is the actual visitor registration app. I mean, in this period of COVID, we learned that everybody wants to work contactless. So we provided that as a new opportunity as well. Then this is the new product that we are launching for the 15th of August to all our new clients. In principle, it's a buyout option of their maintenance office. The management office of a property developer is one of the biggest headaches that they come across. Building the units is their core business. Selling the units is their core business. Customer care often is not the core business of a property developer, because often after the sale is done, they are already on to the next project. So this is where Properly comes in, where we handle customer care services in a proper manner. We want to buy out the management office from a property developer, where we take over the whole system. And in principle, we give back to the property developer 2 things. Very simple. We give them we give them 4 invoices per year. So no monthly invoices or after invoices that need to come after a job. 4 simple invoices per year. And on top of that, we give them full access to all data. So they can see 24 hours, 365 days a year. They can see what's happening in the organization and can make changes where required. On top of that, we provide for reduced cost, optimized workflow and productivity, and faster approvals. Who doesn't want that? Further, do we offer, like I said, outsourcing for the customer care center. We offer white labeling for our clients, security and visitor applications. We are enhancing that at this moment. It's going to be a very unique product that's coming very soon as well. And then we have automated after sales processes, industry benchmarking, and then again, we're very strong on the UN SDGs and ESG goal awareness program, where we want to help our clients, their contractors, but also their residents to be a bit more aware about the healthy environment we want to live and work in. So, because this should be an investor's pitch to anybody interested in investing in Properly. Properly was, our pre-fundraising valuation was 7.2 million ringgit. The price share is 20 ringgit per share. And we have investment packages of 100 shares. So minimum investment in Properly is 2,000 ringgit. So as from 2,000 ringgit, you can own a part of Shop Properly. Now, for anybody who's seriously interested to invest in Properly, we offer you, as from 400 shares, so that's 4 packages of 100, a minimum bonus of 2% of additional extra bonus shares. And for really serious investors, we have a bonus shares all the way up to 12%. If you would like to know more, go to properlyfunding.com. That will take you to the equity page within our equity page within pitchIN, and there you can find all our information regarding the financials of the company. Thank you very much for your attention, and I look forward to any of your questions.
All right, thank you very much, Frank, for your presentation. So while we wait for the questions to come in, I actually have a question, and I believe this is perhaps one of the questions that you get a lot.
Okay.
Why did you decide to have your company based in Malaysia as opposed to any other country?
There's a few things. Number one, I come from a country where it rains almost 250 days a year. Okay, a day like today, where it's 30 degrees outside, we have probably about 10 to 15 per year. So me personally, I sought after a country where I could, where I could live and work and live in an environment that is fun to be in. And I have to admit, Malaysia is an amazing country. If you talk to the average Malaysian, they all want to live outside of Malaysia. But somehow the opportunities are really here. And I saw that at a very early stage. And this is also why I've decided to bring my business here. At this moment, for instance, also government is supporting a lot local businesses. So currently we have an application for our MSC status. We're in the last stage of the approval. So we're working on that this coming weekend with the team. Malaysia has actually a very, very healthy environment for businesses. And because the workforce is there, an English-speaking workforce that internationally easily connects, and it's an absolute hub for businesses in the Asian region. So that's part of the decision that I made to actually remain in Asia once I came here 16 years ago for the first time.
All right, thank you. That is actually very good to know. Hearing this from someone who is from Netherlands, I believe.
Correct. Yeah, there's something actually interesting to add to that, because it's a question that I often get. Is it, okay, you're Dutch, so one day you're going to go back to the Netherlands? No, my heart is here. Somebody told me today, he said, you're Malaysian with a Dutch passport, which I really liked. It was really like a compliment.
All right. So when you first founded Properly, what was your inspiration behind this software, this application? How did it come about for you?
To be honest with you, the software is just the software, because the software is just a tool, and that we have chosen for a very advanced level of software. That's only one thing. What we really brought to this industry is the passion that I had. I could see that within the property development and in the community management sphere, the lack of customer care is really missing. We're not even at average, we're below average. We could do so much better. And this is where Properly really wants to make a dent in the market, to change, to help the property industry forward from a customer care and after sales point of view. In the end, I ask this question sometimes to clients. If you buy a brand new Mercedes and you get the key and the dealer asks you to come, and there's a small scratch on the door, would you take the car home, yes or no? Most people say no. So why would you accept that on a property? So customer care is an absolute vital part of the property business, but it's often overlooked. Not enough money spent on that part because there is no money made. It normally is seen as a cost factor. And we want to help the property developer to actually change that. Yeah. So it's passion.
Right. So on that note, would you like to perhaps share with us some of the properties, or like maybe the types of properties that Properly is currently working with or has already worked with?
Yes. You mean as in clients, but from a client point of view?
Yeah.
Yeah, we handled a large project in Kuantan, where we handled nearly 3,500 units within that whole project. And out of these 3,500 units, we did nearly 850 units. We did all the management and not only management, also the maintenance, the actual physical maintenance on these units. That was a very steep learning process for us, but that's really where we learned a lot of the tricks of the trade, where we really learned the deep understanding layers of what needs to be fixed. And within the development of Properly, we really fixed that. And I can say that our software now can really handle the deeper levels of issues. I mean, the property industry has a lot of issues to fix, to be honest. There's only a few property developers in Malaysia, and even there, sometimes things go wrong. But I think there's only a few property developers in Malaysia that really get it right. To be honest with you, the sales galleries look amazing. But once the key is handed over, that's when the dream gets lost. And we have to change that. That's an attitude problem sometimes.
All right, thank you. Okay, so there will be development of IoT. How do you implement them on those properties?
Okay, in principle, that's actually an interesting question, because IoT comes in many, many different forms. And if you look at the smarter new buildings nowadays, there's so much data coming out of the building. So in principle, we connect because we're a cloud-based company, We run everything that we do is on the cloud. So the first thing that we do is we connect the IoT facilities within the building to our cloud facilities. And that's where everything gets connected up to our data warehouse, and where it then connects into our command center. And from there, we then get a visible view of what is happening. So there you can actually see your different pumps in your buildings, and how's the quality of your elevators? Are they all running up to par and things like that? Yeah.
All right. One of our audience asked if you could please elaborate the market level of your application. For example, what price level of property are you working with? Are they units retailing for more or less than 300,000?
Okay, interesting. Yes, to be honest with you, our very first clients all were from a bit of a higher market segment. Also, some of the clients that in the end we didn't get as a client, but we could see that it was, we were perceived as like a high-end product, which is great. But we also saw that some of the requests that we got came from the higher end of the market. However, we just have a quotation in for 3,000 units in the Prima market, so that's below even 250,000 ringgit. Yeah, and we're not shy. I mean, for us, a property is a property, and it needs to be handled properly. The price range of the property doesn't matter to us.
All right. How will properly help the property industry towards a smaller carbon footprint? I think you have mentioned this. You have touched on this earlier during your presentation.
Right. I think we all understand that we live in a world that is very much changed in the last 20 to 30 years. You know, we become more polluting. We live unhealthier. The world is in a serious state, and I think all of us need to work towards a lesser carbon footprint as individuals, as companies, as cities, and as maybe even as nations. So this is why it's so good that the UN, the United Nations, have come up with this SDG program to actually physically show where every individual in this world and every company in this world can help the community at large to live greener and healthier, and where we leave the earth in the end in a healthier state, hopefully, than we found it in. So properly, from our perspective, we see that our technology can fix a lot in terms of awareness, in terms of training, in terms of making sure that property developers make choices towards greener materials to build in. And if you use greener materials to build in, then the people living in these properties also live greener. The carbon footprint in the end gets smaller. So this is where our technology really wants to educate and train everybody that sits within our sphere, whether they are residents, whether they supervisors or front desk employees or contractors.
All right. So, considering that we also have seen similar solutions as the software that you are providing, what is your plan? How do you plan to capture your market share?
Okay, I understand what you are going for. Yes, we have a few competitors in the market, and I have to admit they've been around for a while, and they have an interesting chunk of the market, and we are one of the new players in the market. I can see at the moment, to be honest with you, I can see some dangers in the market. I've just been chosen as the VP of marketing for the Malaysian PropTech Association. That's 60 members of companies within the PropTech sphere. So we have good conversations with all our colleagues, and I very well understand what's happening at the moment in the market. And the software as a service module, which a lot of the companies have been building on, is almost not sustainable because the prices are dropping. I mean, we can see at this moment during the COVID period that the prices have come down like radical, not a little bit, but radical. And these prices are not going up. So if you're stuck in a SaaS model, you're done, more or less. So we have completely managed services. This is where I just said that we take over the management office for the property developer, and they outsource that whole part to us. So let us do that professionally. And then we don't have to work on the on the little price per unit.
Okay, so I think this is potentially the last question we have for you.
Okay.
What is the long-term vision that you have for Properly?
Very good question. In principle, our long-term vision is to be a global player. And we see Malaysia as our HQ, our hub for the rest of the world. We would like to work in different countries, work in different nations, different cultures, because we've learned over the years that different nations have a different property culture. We would like to learn all of these and build the system up so that we can help people in different countries as well. But again, Malaysia remains our hub, not our local hub, our global hub. Yeah. The long-term vision, if you would say from a startup point of view, of course, would be an acquisition or an IPO within the next 3 to 4 years.
All right. Thank you very much, Frank. I believe that is all the questions we have for you this evening.
A lot of questions today. Thank you very much for everybody. Thank you so much.
All right, thank you. So if you're interested in investing in Properly, they are now live on pitchIN and they only have 19 more days to go for their campaign. And as Frank has mentioned, Properly is providing a last call offer for those of you who are interested. So if you're looking at investing in Properly, please do look at the campaign page soon before you miss your chance. So they are aiming to raise a maximum of 400,000 ringgit with its minimum lot size being 2,000 ringgit. And as usual, you will be able to find more details on their campaign page on our website. So next up, we have Supply Cart. Founded in 2016 by experienced entrepreneurs with previous successful ventures, Supply Cart is a game changer in bridging the technology gap for the Southeast Asia region SME landscape. First introduced as one of Malaysia's premier B2B marketplaces, Supply Cart evolved and introduced its proprietary software as a service, impacting the digitalization of business supply chain management, which embedded trade payment and supply chain financing capabilities. So to know more, let's hear it from the founder and CEO himself. Over to you, Jonathan.
Thanks, Charmaine. Good evening, everybody. Thanks for joining us on a Thursday evening. It's an absolute privilege to be able to share with you. So let me just jump right into sharing with you Supply Cart and what we have done so far. Just give me a sec. So basically, Supply Cart is a Malaysia-based tech company with presence in Singapore and Hong Kong. We've been around since 2016. And basically what we're looking at is being Southeast Asia's business spend management platform. And we have embedded trade and also financing into our platform. And our key goal here is to really work with SMEs to be able to digitalize their business as well. So here's the leadership team. Myself, I'm a serial entrepreneur. I started my first business in 2009. It came from an MNC. And I sold my first business about 4 years later with a 5 times return of investment. So pretty much in B2B. My CPO, Julian, came from management consulting background, oil and gas experience, global experience. I came from an audit as well. My other co-founder, Shang Rong, he came from debt restructuring, hence, familiar with supply chain financing, and embedded financing as well. He too is an entrepreneur, who did B2B trading as well, and he came from consulting background. And Azri, our tech lead, and who has years of experience in building software. So this is us, and pretty much, we really came from that whole B2B background. So, we know what we're doing. So what are we really solving here? Basically, the SMEs in Southeast Asia, it's really underserved and unserved. With 74% of SMEs facing cost constraints, we have seen that the COVID impact, has really impacted SMEs to really rethink how are they doing business, right? As much as there's a huge e-commerce boom, everybody is going on the digital space on e-commerce. What we found is more than 80% of businesses are not using any digital tools. Their back-end processes, it's not connected to the front. 60% of them are manual, right? In 2020 alone, 34% of SMEs saw sales decline. And ultimately, due to the lack of digitalization, cash flow, right? Even being able to invoice their clients, have been a challenging feat. So with that in mind, SupplyCard created, our platform able to help SMEs to digitalize, and we have seen 3 times the speed of efficiency. And remember that cost constraint? Well, we have improved bottom lines of SMEs from 10 to 15%. We have now an embedded marketplace where now they're able to have new channels of growth. And ultimately, with digital trade and digitalizing workflows for SMEs, they're able now to have access, to financing and capital through a huge network of financing partners that SupplyCard has. So how big the market? We see that in Southeast Asia alone, there are 65 million SMEs. And by just targeting 1% would translate to more than 40 billion in supply chain traded value data, 80 million in investments in software to digitalize the business, and more than 800 million of trade that will happen online. So we believe that B2B is the next space. On top of that, is the new black compared to the B2C space. How will SupplyCard be different, right? So we have a virality effect where buyers, multi-stakeholders, you have legacy systems if you're in a business, you have all your different traditional suppliers, and all that is fed into SupplyCard system. And what will happen is, we would have all that data, digital trade, and our open API integrations allows us to integrate with the financial institutions, financing partners as well. And what does that translate to? Basically a digitalized ecosystem of buyers and sellers trading digitally via our platform. And that amount of data would allow businesses to be financed. And ultimately, this model is replicable, repeatable, and harvestable. Imagine more and more buyers bringing on their suppliers. The ecosystem of suppliers keeps growing, then more buyers will come on board. And that's how SupplyCard plans to further scale our business. So what happened in COVID 2020 for us? We saw a 300% growth of total users. We were previously hovering about monthly active users about 500. But over time, towards the end of 2020, we have more than 2,500 users on our platform. That's a huge growth for us in just 1 year for total number of users. We have seen more than 1,000 SMEs get onboarded. And the biggest thing that we were able to establish is a prominent local bank. AmBank has white labeled our solution, where now we have created a platform for SMEs to be able to trade, and ultimately the bank would finance those trades as well. We have also integrated with Zero Accounting, if you have heard of cloud accounting software, and they have a huge database of partner network and SMEs as well that are using the solution. So imagine now SupplyCard digital trade, whatever you do on our SupplyCard platform, it will be recorded on your cloud accounting. You don't have to manually input anymore. So we're pretty excited with these partnerships. All in all, we will have access to more than 100,000 SMEs in Malaysia. And I think that's where it's fueling our growth, and that we will expand further from there. So I wanted to just show you a quick snapshot in terms of what we mean by that whole embedded financing element. Because of all the trade that is going through SupplyCard, that data or that pattern, of course, you might ask, is it compliant? The vendors or the buyers would consent that data to be sent, or they themselves selecting a particular invoice to be sent to a fintech company or a bank. And from there, that trade could be financed very quickly by the bank. So in no way that SupplyCard is financing it. We are purely that enabler to connect buyers and sellers to the right financing partners. And that's how we believe that we are helping the SMEs to expand their business, freeing up cash flow, and the data that goes on our platform, we are able to analyze the buyer and seller patterns, how often they're being paid, how often they're being, what they buy, and so forth. So how have we done so far in the past couple of years? Well, we've done pretty well that we had more than 100% compounded annual growth rate based on our audited accounts. We did in 2020, 7.6 million in top line. And what contributed to that is about more than 60% now. More than 60% of it came from payment, financing, and facilitation, and the balance will be more B2B trade. In terms of trading between buyers and sellers, right? We have now more than 4,000 companies. And just the data alone in 2020, we were able to analyze more than 14 million of data of trade on our platform. So who is using us, and basically who have we on board in terms of our shareholders? So basically, we have been invested by venture capitalists from Singapore, 2 public listed companies from Japan, and in Malaysia we have a VC that is backed by Khazanah, and also of course Cradle as well as our investors, and some of our clients across 68 industries. We do exceptionally well, in terms of tracking all these data, in terms of what these industries are buying and selling. Our top industries include retail, FMCG, education, property management, and so forth. So what kind of model do we have? So we have a multi-revenue model. When we started in 2016, we were merely a marketplace taking anywhere between 2 to 10% of every trade. Fast forward that couple of years, we found that businesses, again, were lacking that digitalization, and basically they wanted more. And what we did from there, we created a software, and we created that whole embedded marketplace and financing within that software to work with SMEs. So our main engine now that is powering SupplyCard is our Saas software. And that's where then we have seen significant growth in our payment and financing elements, and also, of course, B2B trade. And we aspire to be able to encourage cross-border trade regionally as well. And that's where then we are already in Singapore and Hong Kong. So 2020, just to run through quickly, we have more than 14 million of data. Average revenue per customer was about 80,000. And the fees, in terms of facilitating payment and all the fees that we were taking, was about 5%. And we have seen more than 16 million paid to suppliers in 2020. So here's the part where, share you a bit of our journey in terms of when we started, when we received our funding, and just to pinpoint that we launched our platform, our Saas in 2019. And that's where then we started focusing on our technology more. We integrated with ERP systems. We developed that payment solution. And in September 2020, we were in Singapore and Hong Kong. And we were selected by MBank to be their white label partner, and they're using our platform now. So you can just search MBank BizHub, and that's powered by SupplyCard. So that really gave us that confidence that SupplyCard has been a very prominent Malaysia brand. Deloitte tested our security as well, and we passed with flying colors. So that shows the stability and the security levels of SupplyCard. And we were selected by Microsoft, to be one of the 70 startups that they are mentoring for a year. And Zero Accounting was a big integration for us as well. And we're working with Zero Accounting partners. And through all that, we were proud to say that we were recognized by, of course, the Star as Malaysia's second highest revenue growth company behind Qasem. And Financial Times recognized us as 70th place in Asia Pacific, highest growth companies to look out for in 2021. So from a global comparables perspective, some of you might recognize some of these names. They're really large ERP softwares, globally, from Copa and SAP. All these guys were all very big global players, and they're listed on NASDAQ or they got acquired. And we see a very huge potential here in terms of the amount of money that's invested into the B2B space. The closest to us in Singapore is TradeGecko. They were inventory management software. And QuickBooks Cloud Accounting acquired them for 80 million. And really, this is just to show you, the potential of SupplyCard being acquired by some of these players, and the vast interested buyers out there as well. Here is to show that some of them have listed, and that's where our exit would be a potential trade, to strategically we have targeted a financial institution, so it's not by luck that we're having partners with us at this point. We are definitely thinking about what's the potential M&A or exit going to be, especially for our investors as well. And a projected revenue that we have, we did 7.6 million last year, but by 2025 we will see our revenue surpassing 30 million, and with a positive EBITDA and based on software companies being listed, there's a 20 times EBITDA multiplier. That will value SupplyCard at 40 million post 2025, and we are projecting about 60% compounded annual growth rate for the next couple of years. Yeah. We are still sort of loss making, from last year and this year as well. Purely a lot of it went into development of our software for R&D. But moving forward, we are confident in terms of what's going to be happening for our revenues going up within the next couple of years regionally as well. So we already are in Singapore and Hong Kong. This month we launched in Thailand and Philippines, and I think towards early next year we'll be Indonesia and Vietnam. And what makes SupplyCard different is our regional expansions. We do not need to set up office there. We did not have any foot on the ground there. It's purely through a buyer-driven intent that they would like to use the software, as well as the partnership networks that we have established that are allowing us to expand quickly in these countries. Yeah. So we have so far raised on pitchIN, 788, 880. So that's a number actually as of today. We're looking to continue further in our journey to raise, and we're really looking for strategic investors. And the fund utilization really is 40% on product and technology development, and the balance of the 60% is really scaling the business now from partnerships, integrating with different softwares out there, and then ultimately business development and client acquisition. So with that, thanks guys. Looking forward to have you on board with us. We're starting at a minimum investment of 2,000 ringgit, and we're giving 3% bonus shares for any investments above 50,000. And looking forward to have a chat and connecting with you in terms of this investment opportunity. So yeah, do feel free to ask me any questions, and more than happy to connect. Thanks.
All right. Thank you very much, Jonathan, for your presentation. So we have heard that, we are very happy to hear that SupplyCard is doing very well despite the pandemic. But did you see a surge in the demand for your service because of the pandemic? And if so, why is that?
Sure. If you remember that slide that we had 300% growth in users. And I think what happened was, predominantly pre-COVID, a lot of businesses were still running traditionally. We had companies that had manual processes for the past 50 years, using forms, using signatures, and so forth. And when COVID hit, with remote work happening, businesses still needed to run, and they needed to move away from, their legacy on-premise servers or systems. And that's where then SupplyCard was sort of a consideration that they started adopting us. So I think definitely the positive note here is that we have seen a lot of growth, and our pipeline, has been growing. The negative side of things, I guess, with Malaysia, Singapore, Hong Kong playing musical chairs in terms of lockdowns and so forth, businesses, of course, were definitely affected. Suppliers can't deliver, or businesses can't open, so I think that was what we saw in terms of the data speaking, that definitely a lot of businesses were affected. And I think that's where then, it sort of further re-enhance our vision, where we really want to work with SMEs to digitalize, give them new channels to grow, and allowing them to have that kind of financing to expand as well. And I think that's where then we have that fintech angle in SupplyCard, providing that transparency for business as well. So I think we look forward, and we're bullish to, of course, once this blows over, more businesses will be ramping up very quickly. So we are very bullish of what's going to happen next.
All right. We have an audience who asked, what is your current burn rate?
Our current burn rate at this moment in time is about averagely a month, about 60,000 ringgit, 70,000 ringgit. That will be, and predominantly it's more people costs for us. Having that local tech team, we have built everything on our own. It's proprietary to us. So I guess, about 90% of it is people. So that will be a majority of our burn rate at this point in time.
All right. And what is the company valuation for the investors who will be investing in this ECF round?
Yep. So our venture capitalist investors also valued us. We are using a method called VC valuation method. Just to recap that we did 7.6 million last year. So currently right now we are valued at 28 million pre-money at this point in time. And not to go into technicals in terms of that VC valuation method. So we projected in terms of what it would be our exit, what's going to be our projection in the next 5 years. And we work backwards and in a way for investors, what they would enjoy would be, we estimated that investors coming in at this point in time, and based on where we're going to be heading in the next 5 years, you're potentially seeing a 3 times return of investment. And you have seen share in terms of potential value with our positive EBITDA.
Hi, sorry, I think we lost you for a bit.
Oh, okay.
I think it was the second half of your answer that we missed out on.
Okay. So we were saying that I guess we work reverse backwards in terms of using the VC valuation method, and we are projecting an exit, and that investors will get about 3 times more their investment based on entering now at this valuation. Yeah.
Okay. All right. So with regards to fund utilization, like how you're going to use the money that you raised for this ECF round, we heard that you will be making some developments. Would you like to maybe share with us what kind and what are the developments that we will be seeing in supply cart?
Sure. Yeah. I think we have a very, we have a product and elements here is, how do we further integrate with some of these financial institutions and partners? Secondly, and give it a try, that we have really created a very user interface that is really easy, and really making, SMEs like very being able to adopt technology very, quickly and easy as well, and inexpensive and affordable. So I think that is the vision that for us, we want to be that zero, for business spend for SME. So a lot of our development, only 40% of these funds will be used there. I guess because over the years, I would have to say that our VCs have already invested heavily in the technology. We have something working right now. We have a market fit. The investors that you guys are coming in right now, that is very much for our growth already. So I think that's what we will continue to always build on, product driven by our SMEs. Yeah.
All right. Would you be able to share with us some of your competitors locally, and what is it that sets you apart from them?
Yep. So I think from a local competitor who's very similar to us is Priv Asia. They are listed, a public listed company. They are similar in the sense that when we are different in a way where Priv Asia, or they call it Procure here, they are targeting larger companies and the GLCs and everything. And whereas Supply Cart, again, we're not custom building software. Some of these local competitors are customizing that build. But what Supply Cart is really doing, we are sort of building for that ecosystem. Everything we do and we build must benefit everybody. So we are not a customized software. Hence, that's why we're able to replicate and have this virality effect to keep growing, right? Other names that might come up, we will be different from them purely because a number of them are more on FMCG retail space. So if you guys going to mention some other marketplaces, we are not a marketplace. We came from there, but some of the other competitors closest to us, they are now maybe holding stocks. They're now trading in the retail space. So I think the big plans for Supply Cart is we are thinking about how to scale this outside of Malaysia as well. A lot of times when you are a marketplace, and that's where we move to software as well, it's very hard for you to scale. You're bogged down by operational complexities. So being a software, that's where then we are able to scale much faster. I would say that next competitor closest to us will be TradeGecko in Singapore, purely because they have 80 million. I mean, they have QuickBooks behind them to back them up. And if they want to move to our space of business spend, it's easy. So I would think that would be sort of, a very much more regional competitor for us.
All right. So upon completion of your ECF round with pitchIN, how much stake will the holders be holding in SupplyCard?
Yeah, so it can be anywhere upwards of 7 to about 12.5% of the stake of our company, and I think this is the first time that we are raising on ECF, and for me it has been such a great experience, purely because it's really investors like everybody here that is supporting a Malaysian tech company and putting us on the map. And at the same time as well, I would like to say that the investors that we've been getting right now, they are CEOs of multinationals, they are investment bankers, hedge fund managers, and we have really a number of these guys now part of this round. And I think that is where we're excited about, because for the first time we have this type of experience being part of the business with us, which we never sort of had that combined experience before. And I think that was really the benefit of being able to raise with pitchIN. All the CEOs and everything, they can't wait, to sort of open doors for us and introduce us clients. And I think that is what we have been looking for, So I think for me, speaking to the investors in this room and here as well, if you're looking to be part of the business, there's always something that you wanted to start. Why not join us and be part of this business together with us, diversifying some of your investments as well. Of course, I have to say that there is risk for sure. I'm not going to paint a picture that there's no risk, but for us, that break-even point that we are forecasting is in early 2023. If you're looking forward to this journey, do journey with us.
All right, I think you mentioned our risks, so we have a related question to that. Would you be able to share with us what is the greatest threat to the sales card business, and maybe perhaps how do you mitigate the risk on this?
Yeah, I think the risk is, for us, we are very familiar in terms of managing our cost. We know what the clients need. So I think sometimes some companies will look, they overbuild. They tend to spend too much in overbuilding. I think that's something we learned as well early days. And then for now, we actually more sort of down to earth, that we're not overbuilding. And another risk here is adoption, by the businesses. I think change management has always been a challenge. That education needs to happen still for businesses, especially SMEs, right? So I think the market here is still learning. Of course, it has picked up over the years because of COVID as well. So I would say that is the one of the risks in terms of adoption during this COVID period as well, right? In terms of other competitor coming in, for the B2B space, it's very different compared to B2C. So we have like 90% repeat rate. Our churn is really low, less than 4% churn, which means that once they're on, they're on. So if a competitor comes in with huge money and they throw into the market, can they convert? Of course, if they're throwing so much money, it's not as easy as a B2C business. So I would say, it's like medium entry point, for some of these guys. And I think other risks would be, if we can't lead to profitability, of course, then that we need like a longer time to hit profitability. Then what's next? So I think for us, really, the vision for us to keep growing and allowing our investors also to enjoy a return of investments. Our current VCs as well, they're looking forward to that next round, where then we're able to bring in larger PEs, larger venture capital as well, to be able to do so. So another risk could be, what if we can't fundraise? So these will be some of the areas that we are constantly looking at, and of course continue having that growth and not remain stagnant, I would say. Yeah.
Okay, so since your target market are SMEs, what are your main marketing efforts to reach them?
Yeah, so over the years, we've seen a number of things work. So for us, buyer intent driven, when the companies, so we had a huge growth is because companies were ready to digitalize and they started approaching us. So from search engine optimization, we spent a lot of time behind that science there, getting keywords, squatting on keywords. We participate in a number of key events as well, to be able to reach out to SMEs, associations and participation. And another strategy for us then is that partnership we were saying, right, with mBank and the Zero partners, has given us access to 100,000 SMEs. That is a key strategy for us as well to expand regionally as well. We have a number of referrals. So, imagine that, we have a very sticky solution because our platform, the person has changed job 3 times and they've brought our platform together with them for 3 different companies, right? And I think that is really validation of that confidence in supply cart solution. So that will continue going. So I think the strategy for us is the smaller SMEs partnership model is key. So how we expand overseas and everything, or we'll be working with some of these partners. So just to give you a number, Xero has 650 partners in Southeast Asia, and below them will be all the other SMEs that they're serving. So that was one strategy for expansion. And the second strategy for expansion is for us to then target the industries that we are good at, the mid-level size companies that supply cart would directly work with, so I think that would be, I think a go-to market strategy for us this region.
Okay, so what is the total amount of funding that you have received before this?
The total funding that we've received before this, I would say 7 million ringgit since 2015, 7 million ringgit. And we were backed by venture capital back then. And of course, Cradle, Ministry of Finance, and the VC out of Khazanah. Yep.
Okay, last question. Our audience would like to know if it's possible for you to extend your campaign slightly, perhaps by a week. I think this is a good time for me to bring up that Supply Cart, the campaign is actually live now, and they have only 4 more days to go. So I believe this is why we have this question.
Sure. We are more than happy to have you guys, and with that, we will extend. Sure. We're looking forward to have you guys be part of us, and if you need more time, sure, we would have it for another couple of weeks. I think we will look forward to closing end of the month.
Okay.
Yep. So don't miss this opportunity, guys.
Thank you very much, Jonathan. I think that is all the question we have for you this evening. All right.
Thanks, Amin.
All right. So if you're interested in investing in Supply Cart, they are actually, as I mentioned, they only have 4 more days to go for their campaign. But do keep an eye out. They might be extending their campaign, as Jonathan has shared. So they are raising a maximum of 4 million ringgit, with its minimum lot size being 2,076 ringgit. So again, if you're interested, do check out their campaign on our website. So last but not least, we have with us this evening is Rafiq from Intercon. So founded in 2019, Intercon is a FMCG company specializing in distributing local and imported halal food products. Intercon's strength as a halal food product distribution company is its own set of pre-existing strong partners, and it utilizes a unique third-party logistic provider systems that hybrids both the sale of other companies' products as well as its own products, and encompass a complete ecosystem to cater to both ambient and cold chain products that allows them to cater to every segment of the business. So without further ado, let's hear it from Rafiq, the founder and CEO of Intercon.
Hi, good evening, everyone. Thanks, Charmaine. I think this is my second time coming live on the platform. What I'll do today is I'll just run through the slides again about Intercon. All right. Okay, basically like what Charmaine mentioned, Intercon is, we established the company in 2019. So we just completed our second year of operation. My name is Rafiq. I'm the CEO founder of Intercon. My experience is basically close to 25 years in the FMCG, F&B business. I spent about 25 years with QSR brand, looking after the Ayamas life chain of ready-to-eat products. Later on, I'll take you to the slide of my team members as well. All right. Basically, we are a halal distribution company with existing strong partners. We have a unique third-party logistic provider that hybrids both the sales and we have a complete ecosystem. What we are referring to is we don't only focus on a particular kind of product, frozen. We do frozen, ambience plus chill products as well. Total addressable market. Basically, I think we know, especially now with the COVID situation, the consumption expenditure in the FMCG has actually increased quite high. Based on the latest Euromonitor report, basically they expect Malaysian market close to 74 billion as at 2020, and estimated to be at about 74.08 billion, 79 billion by end of this year. And expected growth by 2025 will be about close to 92 billion. What makes us unique? Basically, I think, like I mentioned, we have been in the market for about close to 25 years, even though we've started our business the last 2 years. The team, which is in Intercon, collectively, we have more than 50, 60 years of experience. We have worked with the modern trade, with the traditional trade, with the mini markets and all that. It's easy for us to access the markets. I think the market is getting very competitive, especially in the FMCG. So what helps us in this area is we have the connections, we have the know-how to deal with the buyers, the distributors, the wholesalers. We tend to market ourselves as a niche segment because we don't only work with SMEs to appoint us as distributors. We also work with them on their marketing, on their productions, on their packaging. Like recently, we worked with a couple of new manufacturers to get them certified halal, to get them certified to get the veterinarian health certificate as well, so we can export those products into Singapore, into Sabah and Sarawak. And we have our own house brand as well, which is Rafi. Rafi is basically very much chicken-based products. This is our range of products which we have. The nuggets. We have 3 types of nuggets: golden nugget, crispy nugget, and something new which we have incorporated since we launched the nugget is smoked tempura nugget. There's nobody else doing this, so we not only we're looking at the normal range of product, but we are trying to bring in more products which is not available by other brands. We have fried chicken, we have frankfurters. Recently, we've just launched chicken bites and fried chicken skin as well. Other than getting it produced locally, we are also importing French fries and butter from Belgium. And if you look at it, the new product launch, we have plans on a quarterly basis to bring in new products. After the next product coming in will be onion rings in October. And then we also are planning to bring in Korean fried chicken before the year end. So the plan is every 3 months to bring in some new products and create that market hype. Other than our products, like I mentioned, we work with a lot of SMEs. We work quite closely with Mara, to see what are the kind of products we can help their entrepreneurs to market in the local market and all that. So we have wafis, which is the traditional Malay kuihs, curry puff, and then we have ready to eat from Sharifah, another Mara entrepreneur. We have burgers. One unique thing about this burger is it's not the normal beef and chicken product. There's also lamb burger and ayam kampung. So this is something different they're doing. We have sauces, chili, Thai chili, tomato, black pepper, barbecue sauce, House Boom. The name sounds quite Western, but this is a local chain manufactured in Terengganu. Then we have Kinche Mas, and then we also have Sambal Chetno. Other than this, we are actually currently we are working with a couple of manufacturers to bring them aboard as well. So we are looking at bringing them aboard by October. This is where we are present now. So if you look at the list, we are almost in most of the supermarkets. We are getting our products into Giant and Mydin in October. We are currently working with 7-Eleven as well to list some of the products into their chain as well. So, by the year end, I think the presence of Rafi product and our principal products will be available in most of the supermarkets, local supermarkets and international supermarkets, except for Village Grocer and Jaya Grocer. And the plan is to penetrate these markets by early next year. This is the list of our operations, how we work with. We work with distributors, we work with wholesalers, we work with retailers, and the local key accounts, plus the international key accounts as well. So our platform is a little bit, our modus operandi is a little bit different. We do not want to appoint too many distributors across the board. So what we do is we work with one frozen distributor, one ambience distributor in each state, except for Selangor, because the market is quite big. So what we have done is in Selangor is we have actually appointed 4 distributors to look at 4 different geographical locations. We have presence even in the East Coast, plus Sabah and Sarawak as well. So our main strategy in 2021 and beyond will be focusing on opening more outlets, which we have been doing this year. And we will also like to recalibrate our sales channel as well, to not to be reliant too much into one channel, but to spread it out evenly, so we are not too dependent on one channel. The other thing is we are looking at increasing our sales personnel as well. Since we started in 2019 till now, we have been working with the same number of salesperson. So we are bringing in new people because the product portfolio is increasing from about 15 products 1.5 years ago. Now we carry about close to 70 old products. So this is our company expansion plan from 2021 to 2026. So basically, what we are looking at is 2021, we expect to close at 30 million. And it has been a tremendous growth for us over the last 2 years. When we started in 2019, our first year, our turnover was only about close to 4 million. Last year, we managed to close to 14 million. And this year, we are targeting at about 30.6 million. Next year, if you look at it on year, we are looking at a very very low growth of about 10% on a year-to-year basis up to 2026. We plan to bring in more products on a yearly basis, secure new distributorships. As you can see, in 2021, our target is to secure 2 distributors, which we have done. Next year, 4, the following year, 6, and so on. So what we'll do is we'll keep on bringing. So this distributorship will bring in new products for us as well. Under our house brand of Rafi, we plan to focus on new products as well. So currently, we are working on coffee and pasta with a manufacturer in Vietnam and a manufacturer in Turkey for the pasta. Next year, we are looking at cooking paste, maybe spices the following year. But this is not carved in stone. So as we go along, we find that something right coming in, we will start working on it. In 2024 is where we are going to start looking at going out of Malaysia. Currently, our focus from now to 2023 is just to look at the Malaysian market, inclusive of Sabah and Sarawak. But in 2024, we will start participating in food trade in the domestic and international market. We are looking at expanding our cold room capacity from the current 90 pallets to maybe between 180 to 200 pallet space. Then in 2025, we are looking at either acquiring smaller SMEs and converting them into Rafi brand products. And in 2026, we are looking at setting up our own production line as well, factory. So that's our go-to plan for the next 5 years. Our current revenue model is this. So we OEM Rafi brand. We work with local SMEs to market their products. This is our projected growth over the next 5 years, as I mentioned earlier. So basically, this is the team. Other than me, my colleagues are Ben Ho. Ben has been with the FMCG business as well for close to 30 years. Ho Su Siang is also been with QSR brands. He was in charge of QSR trading, which markets Ayamas and Life in all the supermarkets, distributors in the market. We have Halim, who's the head of finance. Halim is also from QSR. He was the CFO of the upstream business. His experience is not only in QSR, but also with Pepsi Malaysia. Then finally, Zahir, who's the head of logistics and warehousing, with a lot of experience in the logistic business, transportation, and supply chain. And his last posting was also with IMAS. Our ECF offer is basically we are looking at raising 1 million up to 5 million with redeemable with the RPS shares. Our pre-fund valuation is about 12.7 million. Our share capital is about 2.4. So we are looking at issuing shares up to about 28.1%. Minimum investment is in a block of 500 shares at 2,660 ringgit. And other than this, we also have pre-life offer. If you get 10 blocks, which is about 26,600, you get additional 2.5% shares. And if you invest in the 25 blocks, you get additional 5% shares. How we intend to utilize the fund. So basically, the breakdown will be professional fees about 10%, working capital for listing fees 20%. This is actually the bulk of our investment. Whenever we get ourselves listed in the supermarkets, in the mini markets and all that, there's this listing fee you have to pay to get your products in. And the listing fee can range from about 25 ringgit up to about 150 ringgit per product. It depends on the supermarket chain which you are penetrating. We are looking at spending 40% on working capital to close the gap between AR and AP, plus to buy inventory. As I mentioned, we do import in butter and fries. With the sales picking up, we also need to keep additional, at least about additional half month to 1 month additional stock. So whenever our consumers, our distributors or the supermarket orders can be fulfilled within 48 days. So the turnaround time will be faster. The repeat order will also be faster. As we expand, we are looking at getting into buying chillers, trucks to help us with our logistics. As I mentioned earlier, we work with third party. We actually outsource all our logistics and warehousing. So part of it, we will try to do it on our own as well. So this will be how we will utilize the fund when we raise the amount. That's about it from Intercon. If you have any questions, you can always email to us on the email. All right, thank you.
All right, thank you, Rafiq. So, seeing that Intercon was established in 2019, very soon before the pandemic hit, how was your experience managing a newly established company at such uncertain times? And how was the growth process for the company?
I think I think for us it was a blessing in disguise with the pandemic, because FMCG, food and beverage, especially with the first lockdown, people were not coming out, so supermarkets were being, running out of products and all that. So I think we actually came into the market at the right time. And like I mentioned, when we started with only about a turnover of 4 million. And last year, when the pandemic came in, we managed to increase our turnover more than 300 times, from 4 million to about 14 million. So it actually, I think we came in at the right time. So food and beverage, people still have to eat, lah.
And especially because everyone is at home.
It is a necessity. So it's just a question of whether consumers will trade up or trade down. So our go-to strategy is not to market our product at a higher end, nor we want to put it at the low end. So what we're doing is we're going at a midpoint pricing as well.
All right. Being in the food supply industry, how do you manage the health and safety risks?
How do we manage? So we make sure that all our the factories which we are working with, the one which our manufacturers, we ensure that they have all these regulatory certificates with them. So one of the things is we make sure halal is there. They are either HACCP certified, they have either GMP or ISO. And because we have been in the F&B industry for so many years, we also know that we make sure that all those employees they also get themselves inoculated with typhoid jabs and all those type of things. So it's the same with the office as well, since we actually do deal with food and beverage most of the time. We also make sure that all our salesperson are actually properly vaccinated with typhoid as well. And now with the COVID situation, and we've been quite lucky that I would say that about 95% of all the team members which we have, including the management, we've all been vaccinated with COVID as well, both jabs.
All right. What is the company valuation currently for the investors who will be joining this ECF campaign?
Currently, I think, like I mentioned, basically our pre-what valuation is about 12.7 million. So we are actually giving out shares up to about close to 28% of the valuation.
Okay. We have heard that you have plans to go out of Malaysia, maybe in 2024. Are there any countries in particular that you are currently looking at?
We are looking at Singapore as the first base, followed by Indonesia. Then, because of the network we have, we are looking at the Indian subcontinent as well, like Bangladesh, India, Sri Lanka. So we are looking at starting off with these few countries. On the east side, we have actually sent samples of our products. We have had some requests for our products from Cambodia and Vietnam, and we have actually sent them some samples a couple of months ago, but we are putting all this on hold because at this moment in time, the penetration in Malaysia also, we still have a lot of demand of our products. So we do not want to overcommit or overpromise.
Okay, so who are some of the key partners that you have worked with up until now?
Key partners in terms of manufacturers or distributors. So in terms of manufacturers, I think you mentioned our biggest partner is FY Food based in Ipoh. They produce all our Rafi products. The other one is Santraco, who produce the sauces. And key partners, I would say that in terms of distribution of sales and all that, our biggest partner today is Tesco, plus a few distributors like in Kedah, Johor, and Sabah Sarawak. So these are our key distributors, partners in sales side.
Okay, what would you say is the competitive edge of Intercon, considering that you are relatively new to the market and perhaps without a manufacturing line or a chiller room?
I think our biggest challenge will be having sufficient supply. Because working with third parties, especially on the Rafi brand, they have their own line to produce for their own range of products, and they can only commit a certain range of quantity to you. But we've been lucky that we've actually signed a contract with FY Food, where we feel that with our current sales growth and all that, we should be able to sustain this growth for the next 4 years without worrying, looking for another source of manufacturer for our range of products as well. But we're not going to put all our eggs into one basket. As we go along, maybe in a year's time, certain Rafi products will be manufactured by another manufacturer. And until we feel that the time is right, currently we think 2026 is the right time for us to actually set up our own manufacturing plant. But we might actually bring it forward by a year, if there's a need to do it.
Okay, what would you say is the best-selling product of Intercon?
I would say currently is the nugget range is doing very well. Everybody eats nuggets, right from a kid to a retiree. Followed by, the fried chicken is getting good response. We've just launched chicken bites. Chicken bites it's a bigger version of popcorn chicken, but it's consistent in size, because it's if you eat chicken popcorn, sometimes you can find the sizes varies from 0.2 cm to 0.5 cm and all that, whereas chicken bite is uniform in size. That is starting to pick up as well. So these are the products under the Rafi brand. From our principals, we actually have seen a good jump in House Boom beverages, the burger range, plus sambal chetno. They are actually, and I think the principals are quite happy, that sales have actually gone up more than 100% over the last 12 months.
All right. We have also an audience who asked if there is any chance that they can get samples of your best-selling nuggets.
You can always contact me. We can always talk about it.
And if I were to look for your nuggets, where would be the best place for me to find them?
You can find it in Tesco. You can find it in KK Mart. You can find it in most of the local chain. If anywhere you stay nearby, there's Segi supermarket, so Wellmart supermarket and all that. So it depends on where you are staying or where you're working. So I would say that by next month we should be everywhere in Klang Valley, in most of the supermarkets.
Okay, we look forward to that. And I think that is all the questions we have for you this evening. Thank you very much, Rafiq.
You're welcome.
All right, so for those of you who are watching, if you are interested in investing in Intercon, they are currently pre-live on pitchIN, and they are aiming to raise a maximum of 5 million ringgit, with its minimum lot size being 2,660 ringgit. And as Rafiq has mentioned, they are also offering pre-live incentives, so do check them out. So before we end this session, I would like to invite again the presenters of all three companies to come back on video to share some of your final words to our audience today. So Frank, perhaps you can start first.
Yes, I will. Sorry, I gotta take my microphone back here. I just understood that you shouldn't be giving bonus shares. You have to give away bonus nuggets. That's a fantastic one. Really good. Okay, properly. We have another couple of days to go within pitchIN. I think it's about 12 to 14 days. So make use of these last call offer. Currently invested in properly is a range of investors, but out of the range of the investors, there are 2 property developers that have invested. So that makes us very proud. That means that we're hitting the target within the industry. If there are any property developers that are listening to this recording or even tonight live, we have a special deal for any property developer investing in properly, regardless the amount. We will give you a 6-month free use of all our software services. And don't forget our 2 to 12% bonus shares that we give till the end of the month. And then properly is a managed service with a passion. Thank you very much. Thank you again to pitchIN for the opportunity.
Thank you, Frank. And next up, Jonathan, would you like to share your final words?
Yeah, but I just wanted to thank everybody for the opportunity to share about our business, and also the other issues as well, Frank and Rafiq, and also just to let everybody know, that, again, supporting Malaysian companies, it's really something that we need to stick together. So it doesn't matter which company, it could be supplier card, but yeah, I just want to encourage everybody, that let's journey together, and make Malaysia great, right? So thank you very much for everybody's attention and time. Looking forward to having you. That's all.
Thank you. And finally, Rafiq, would you like to say a few words?
Yeah. Before that, I'd like to thank all those investors who have pledged to Intercon over the last 4 weeks. Thank you very much for your pledge. Moving forward, like I mentioned, FMCG, especially food and beverage, it is a growing business. And I think investing in food and beverage, you will never go wrong. If you look at it, we are offering not ordinary shares, we are offering RPS with guaranteed return payable on a quarterly basis over the next 5 years. So, you will definitely get back your returns, your dividends on a quarterly basis. I think that's about it. And I think, we aspire to be a DKSH of Malaysia, working with SMEs to market the small Bumiputra entrepreneurs. So investing with us, like what Jonathan mentioned, we are looking at helping the Malaysian economy, helping the local SMEs to grow as well. Thank you.
All right, thank you very much. So we have now reached the end of the session. Thank you again, Frank, Jonathan, and Rafiq for joining us this evening and for sharing your business pitch with us, as well as those of you who have tuned in this evening. So do stay tuned to our Facebook post and our weekly newsletter for more updates. Until then, on behalf of pitchIN, thank you for your support and stay safe. See you soon.
Thank you.
Thanks,
Good night,
everybody.
everyone.
Bye-bye.
Thanks, Shamin.
All right, bye.